This is Kyle with Fundamentals of Finance, back with another video helping you decipher fake news finance from fundamentals of finance. This time, I'll be diving into the real estate market because I don't know about you, but I've seen a ton of YouTubers lately calling for a major 2008 style crash in the US housing market. And for many reasons that I'll touch on today, I just don't think it's likely to happen. So in this video, I'm gonna dive into the top 5 false and uninformed arguments out there about why the housing market is gonna fall and show you why a lot of the panic is overblown. If you just type something like housing market into YouTube, you'll see that almost every video has some extreme superlative in it that's designed to scare you. Let's take a look. We're in a housing affordability crisis. 20% correction is coming. Huge changes coming to the US housing market. Redfin now shuts down and announces layoffs. Why 2023 will be worse than 2008. Mega crash. Okay, we get it. So let's dive into the top 5 false arguments for why the housing market is going to crash, which are pretty much the same across most of the videos I've seen. Number 1, they say home prices are decelerating at the quickest pace in history. I'm not joking, someone actually put this chart up and said that. They may be decelerating at the quickest pace in history, but that's because they were going up a lot before, not because they're going down a lot now. You can see prices actually only declined by 0.2% for the last month, after over a decade of constant strengthening, and they're still up over the past year. So the market isn't exactly crashing. But when you're trying to scare people, who's got time for details? Number 2, they say some markets are really expensive, or some markets are seeing home prices falling significantly. But you know you can't trust it when you hear some markets. Remember, the top 3 rules in real estate are location, location, location. So picking out some random small town where prices are down 50% and using that to imply the entire market is gonna fall 50% is like saying this random stock is down 50%. Therefore, all stocks are gonna fall 50%. It simply just doesn't work that way. The reality is that the US housing prices are still solidly up over the past year. They could and likely will fall, but not anywhere close to 50% broadly. But guess what? It gets even better because one prominent YouTuber, Graham Stephan, actually used this chart to say,
and several markets have already fallen nearly 50% from their peak.
But if you look closer, what this chart is actually showing is the markets with the biggest seasonal changes in prices using the median from 2015 to 2019. This has nothing to do with home prices falling in 2022. And that brings us to argument number 3. They say houses are not affordable and home sales are way down. True, but this argument shows a lack of understanding of basic economics. Sure, falling home sales are bad for home builders, but for home prices, it depends on why home sales are falling. If sales were only falling because no one could afford to buy a home, crushing demand, that would lead prices to go way down. When it comes to basic economics and the impact on price, demand is only part of the equation. And YouTubers are missing the other side, supply. People don't want to buy houses because mortgage rates are so high, but they also don't want to sell houses because mortgage rates are so high. And most people have a much lower rate locked in than what they get on a new home today if they wanted to move. So they aren't selling, and what this means is that yes, demand is down, and that leads prices to go down, but supply is also down, and that leads prices to go up. So prices could fall, but it's not some foregone conclusion that we'll have a huge 2008 major housing crisis just because of that. Now, in argument number 4, they'll often use short-term charts to show how inventory has been rising since the beginning of 2022. If inventory has been rising, that means fewer people want to buy at the current prices, so they have to come down, right? Well, what these guys won't tell you is that inventory always rises in the summer. It's fallen the past few months since the summer ended, and it's still at its lowest point in the last 40 years, except for a few brief periods since the pandemic. Housing inventory was more than 3 times higher in 2007 than it is today. So it's not like no one can sell their house. No one wants to sell their house, which is very different and will not likely have the same impact on prices. The 5th and final argument that I'll highlight today is when they say a lot of recent home sales were to investors who bought them just to rent them out. And rents have gone up a lot, so people can't afford them anymore. And that means rents will come down, and that will cause investors to sell their properties. Okay, let's take this piece by piece. People can't afford rents anymore, so they have to come down. Well, where exactly are these people going to go? Are they just gonna choose to be homeless? Are they gonna buy a home because they can't afford their apartment rent? Not likely. So the idea that there's gonna be some mass exodus of renters doesn't seem plausible to me. Sure, you can find headlines about people moving back in with their parents, but that's not gonna be enough to move the needle on the entire national rental market. Let's say rents do come down. Is that really gonna cause investors to sell their properties? Part of the premise of this argument is that rents have gone up a lot, right? So if an investor bought a house that they needed to rent out for, say, $2,000 a month for it to be profitable, and now they're renting it out at $3,000 a month, that's pretty good. If that tenant leaves, rents are down, and the best they can do is rent it out at $2,500 a month, are they gonna take that? Of course they are. So the argument is basically that instead of making $500 a month on the investment property that they just bought, they're gonna give up all that income and take a big tax hit when they sell the property? Yeah, I highly doubt that. Okay, so where does that leave us? I'm gonna have a more detailed outlook on housing in my next video, where I'll go through why the 2023 housing market will be nothing like 2008. But in short, I do think house prices will fall, just not in blades of glory crash fashion like a lot of YouTubers would have you believe. In fact, it's actually normal for house prices to fall in a recession, particularly one where interest rates have risen a lot leading up to it. Most of the respected forecasters I've seen are calling for declines of 10 to 20%, which is a lot for housing, but given the fact that prices are up about 40% over the last 2 years, I don't really think this is reason to panic. Could they fall more in a specific location? Sure, absolutely. But I think the vast majority of homeowners are still gonna have positive equity in their homes, and about 97% of buyers in the last 2 years locked their rates in for 15 plus years. So people's actual mortgage payments aren't gonna be affected, even if rates stay high. Keep calm and carry on. If you wanna know the 9 habits you need to be a successful investor, check out the link below in the description. Also, don't forget to subscribe because in my next video, I'm gonna cover the 2008 housing market versus the 2023 housing market and how they're completely different. Thank you for watching, and I will see you in the next video.